Here we go, guys. This is 𝙈𝙀𝙏𝑇's Cowboys Metals Live. It is Thursday, December 15th, 2022. Hope you guys are doing well. Thank you for joining the channel. We're going to get everything ramped up here in a moment. Let everybody enter the channel as we do sound check. Sound is good. Everything looks good. We're 4x4. Thank you, Peter, for riding shotgun on this Thursday live stream, special live stream. Typically do it on Tuesdays. However, we had to delay it this week due to medical emergency in my family, but we are back with the live. And for today, we're going to be talking about deflation. The title of the live stream is called Deflation is Here and How It Will Rip Apart the Economy. And literally, it will rip apart the economy. And that's what we're going to be talking about today. A lot of people are expecting higher inflation. However, the last couple of months, the CPI has come under expectations. I believe we're in the 9% range, the official government inflation number. It fell down to 8% a couple of months ago. Now it's down to, I believe, a 7.1 print. And I think that shows that we're in a deflationary wave. I'm going to show you where this has happened before. It happened in the 70s and 80s, and it also happened back during the last big crash around the Great Depression as well. Those patterns have held steady in American recession history. And certainly we're going to be able to talk about that and walk you through that data. We have a poll up. It's inflation, deflation, or both. And so far, 84% of people say both. And I happen to agree. I think you're exactly correct. Remember that super chats are open. If you want to ask a question and have me enter it, please do the super chat as well. We have a special membership for those that want to watch 𝙂𝙀𝙏𝑇's Unfiltered, where I give you a lot of my thoughts on things and where they're going. And we cover a lot of material we don't cover here on the free channel. The next 𝙂𝙀𝙏𝑇's Unfiltered will be talking about man's role in society, masculinity, femininity, and how that has changed and how it may be affecting not only the family demographics, but also the future of the economy in the United States as well as across the world. Demographics is a huge part, plays a huge part into the economy. I want to talk about how the mores and values of that have changed and whether or not men's role in society is still the same and whether or not that's going to lead to better or worse economic outcomes in the future. So stay tuned to 𝙂𝙀𝙏𝑇's Unfiltered for that. We'll have that for you in another week for those of you who support the program. Thank you, everybody that does support the program at both membership levels. We really do appreciate it. All right, without further ado, we're going to get in the charts. And basically all I have for you today is charts, and we're going to walk through the charts and we're going to talk about the inflation, deflation debate and what's likely to happen first. So without further ado, let's get the charts up on the screen. This is from a research study looking at periods of inflation, and the data is from Bloomberg, Bank of America, as of September 22nd. And this is number of years for year-over-year inflation returned to 2%, following a breach of 5. So JP Morgan came out a couple of days ago, and the article was in Zero Hedge that stated, in American history, every time inflation goes above 5%, it takes 10 years for inflation to get back down to 2%. And we have been above 5% pretty much all year long, even dating back to some last year. And it looks at different countries. There's some studies we have for the United States and for other countries. As you can see here, the average number of years for France to get its inflation down under 2% once it breached 5% was 29, according to the study. United Kingdom, the same, 29 years. Netherlands, 22. Japan, 22. Canada, 21. Italy, 15.5, Belgium, 15, Sweden, 14.5, the United States, 12. JP Morgan, I think, said it takes more than 10. So that tends to agree. JP Morgan's study, along with what Bloomberg and Bank of America put out. Germany's 9 and Switzerland's 5.7. So is inflation going to return to 2% anytime soon? Probably not. It's going to take some time. And inflation is a multi-year event, not a multi-day or week or even month event. When it comes and it breaches 5%, it tends to stay there for a while, which may be another reason in which the Federal Reserve is basically wanting to change the target inflation rate closer to 4 to 5%. I think they mentioned 4 and then 5 was kind of suggested, maybe like a reset of expectations, if you will. It's kind of moving the goalpost from the 2% range they've had, dating back to, the beginning when they've said that was their inflation target. And that all had to do with World War II and getting a little bit in the history of why 2% is an inflation target. Back after World War II, we had to build the economy, and we did not have inflation pressures in the economy. We mostly had unemployment pressures. People didn't have jobs. And so the Phillips curve was essentially this thought by economists and analysts that you could trade a little bit of higher inflation for lowering employment. So if you could get inflation up a little bit, you would have higher employment. In other words, if you goose the economy, you get it running, inflation goes up, then that means you probably have a healthy jobs economy. The problem is right now we have both high unemployment and inflation. And I will state that our unemployment is much higher than the government number of 3.7 or whatever it was, the 𝙂𝙊 number, because if you look at labor force participation rate, it's sitting down at 62%. And that basically means 38% of all the able-bodied and willing to work adults in society don't have jobs. And it's been at that level or that low since the peak in about 2000, when I think it was closer to 68, 69%. So it peaked in 2000, dating all the way back to World War II, and then it's fallen since. So we've reached our peak employment, essentially. And even though unemployment is going up and 38% of people can't work, inflation is still going up. So that whole Phillips curve ideology that we've been operating on since the 1940s is basically fallen apart. That is an 80-year trend of monetary policy that has fallen apart. All right, getting back to the share screen, because we've got more for you on the inflation versus deflation debate. We know now that it takes a long time, depending on what country you're in, to get it back under 2%. Well, then Rob, how are we heading into deflation? Well, let's talk about that a little bit. Here is the history of inflation and deflation for two time periods, the 1940s through the 50s, which basically was the wartime and just after wartime. And then, of course, we have 65 to 97, which encapsulates the high inflation era of the 70s, along with the lower inflation areas of the 90s. But as you can see here, there's a pattern that emerges. 3 waves of inflation in both cases. This one, the first wave in 1941, followed by deflation, then inflation again from 1945 to 46, followed by about 3 years of deflation, and then about another year or two of inflation, and then it fell off. Same thing in the time frame from 1965 to 1907. Of course, we had the oil embargo and crisis. We had higher inflation rates where Paul Volcker, once inflation got up here to the 14 to 15% range, he raised interest rates up to the 18 to 19% range and got control of the economy and caused it to cool off. But again, waves, wave 1 up to 6%, wave 2 up to 12%, wave 3 up to almost 15%. And that's what happened in the US the last 2 times that we had inflation. It went in waves and it got very strong. But it was followed by deflationary waves. So inflation, in other words, doesn't move in a straight line. It's something that ebbs and flows. And I believe right now we've passed stage 1 of inflation and we're headed into this deflationary wave. And to that point, I recently interviewed 𝙈𝙁𝙁. That's actually going to appear over on Stock Pulse's website as Inside the Markets. And when 𝙈𝙁𝙁 came on with me with Inside the Markets, we were talking about that. And he gave me this really cool chart that he's graphed out from the 1970s inflation that you can get by going to Crescat Capital, or you can get here on our show. And it says we are here now. So we've gone through this first wave of inflation. It peaked at 9% or so. Now we're starting to deflate. Right now, the CPI is at 7.1. And then eventually what's going to happen, it'll come down to some level. Will it get to the 2 to 3% range like it did in the 70s? I don't know, because it never got to as high as a 9%. So probably we won't get back down to 2%. This time in deflation. And then we'll have another inflationary wave and then deflation and then likely another one. If history is any guide, that's likely what's going to happen. So what does that mean in terms of deflation right now and what it's going to do to the economy? Well, essentially, when you have a deflationary wave, there are a couple of different types of inflation. There's basically demand and supply inflation, and it depends upon whether you have not enough supply and versus demand, or whether you're having to push goods in the economy. There are different ways that inflation can occur. And rather than going through those, I just kind of want to talk about inflation in general. Inflation can be caused either by supply or demand factors or both. If you look at the pandemic and what happened in the closures, we had inflation because we had a lack of supply and a breakdown in the supply chain. Now, the supply chain issues were not just related to the pandemic. They were exacerbated and found out and became transparent during the pandemic. But the factors that led to the supply chain shortages have been brewing for several decades. And a lot of it has to do with globalization. A lot of it has to do with just-in-time inventory controls, lack of manufacturing, and lack of supplies in the US. And what essentially has happened is now we have an inventory ramp, because after we restarted the economy and we went into the mode of essentially creating, we went in the mode of dealing with pent-up demand and creating additional product. We did too much. We overshot. In other words, it's like a slingshot pattern that happens quite often when you have a deflationary wave or a recession is that you overbuild, and so inventories ramp up. And so another thing that I want to show you guys is an article I wrote for 𝙎𝙊𝙇𝘿 about the inventory ramp up. And you can see on this screenshot that we're looking at a ramp of inventories. And not only are we looking at a ramp of inventories post the pandemic, this is the decrease in business inventories because of the pandemic. It was a little dip, and then boom, it is shot up at a faster rate, almost vertical rate than it was going before. And a lot of this was business, the restart in business saying, oh, we have all this demand, let's make demand. But that was demand to recover from what we weren't able to buy here. Okay, so the initial inventory ramp should have stopped about here and then gone the same way, but they ramped it up too far. It was an overshoot. And now we have too much inventory, and now prices are going to come down on a lot of goods and services because we have too much. However, at the same time, certain goods and services that are in demand may not go down quite as much. We see oil coming down, for example, WTI oil prices are coming down. They're now in the 70s. And then people are saying, I'm not going to touch oil. Well, oil could spike up depending on the need. If we have a lack of supply of oil, if you think about the amount of investment going into oil right now in the oil field and resource field, we may not be developing next year's oil or next year's gold or silver or next year's base metal deposits. So then we're going to have inflation again, then you're going to get wave two. And that's what happens. We're in this violent swinging back and forth of demand and supply. And that's normal when you're going into a deep recession like we're going into. You have these violent swings in the economy, which causes violent swings in asset prices, which is why you're going to see violent swings in gold and silver prices, the S&P, the Dow, and lots of other things in the economy as well. That's the period we're in. It's going to be highly volatile, high levels of uncertainty, prices yanking up and down, but also shortages in the supply chain of things because of supply chain fragility and deglobalization and bringing in manufacturing back to the US because of geopolitical issues and trade issues. That's going to cause shortages in certain goods. Probably the shortages are going to incur goods that we need every day, like food, water, energy security, land. Those types of things are going to be more valuable. We're going to have a crash or deflation in other things like services and other things that people don't necessarily need. Lots of things, for example, the restaurant industry is not fully recovered. The movie industry is not fully recovered, and maybe they never will. It just depends on what happens to our economy. But a lot of areas of the economy are going to be ripped apart, and they're going to be ripped apart even more than they were in the pandemic. You remember a statistic that came out during the pandemic was 85% of mom and pop restaurants that had closed as a result of the pandemic may never open up again. And what happens is all of that business basically, when the demand comes back for that, it moves up to the bigger companies that can afford basically to service that business in restaurants and hospitality. So you see a lot of consolidation. You see destruction of small business and consolidation into the bigger businesses. So this deflationary wave is not good for small business. It's not good for new job creation. It's not good for employment. And it's not good for managing the economy because we don't know the signals we're getting, whether we need to increase production or decrease production. We keep reacting and being behind what the market is telling us, and it creates these rolling waves of inflation and deflationary cycle. And that's essentially what happens. And that's happened twice in the last century in our economy. I expect that probably to happen again. Now, I do think it would be worse this time because if you think about it, we also have at this point in time a currency crisis. So not only do we have a fiscal crisis, not only do we have fundamental economic issues, which are different. The fiscal crisis can be more of money spent and debt load, whereas the economic crisis can be more of like world economic production and growth. And then you also have a monetary crisis on top of that with the dollar and the competing BRICS currency that's coming out. And all of those things are going to occur at the same time. All of those things did not occur in 2000 during the tech crisis and 2008 during the mortgage crisis. Those were one or the other of those things. Now we're going to have all of them coming together, it looks like, at the same time. So I think the depth of this recession is going to be deeper, but expect rolling waves of inflation and deflation fighting each other. And that's going to cause a lot of conflicting signals in the economy. And I think it's going to cause a lot of misallocated capital and destruction. And I think a lot of that destruction is going to come in the debt markets and in the stock markets as a lot of companies get put out of business. I further expect a lot of established businesses go out of business. Companies, especially in tech, to go out of business and new ones to rise, just like what happened during the tech crisis. We could also see that in banking as well. I think possibly the destruction of a lot of retail banking, credit unions, and maybe rolling up of the banking business into the big commercial banks, consolidation into the more powerful entities for a lot of industries. We could see that in media. We could see it in hospitality. We could see it in food and farming. We could see it in a lot of areas of the economy, more consolidated control up into the big corporates because the small guys aren't going to be able to keep up. This inflation deflation these waves rolling through the economy are gonna put smaller guys out of business and force consolidation there and force debt restructurings and stuff like that. Probably increase unemployment for quite a while until the economy can recover. Because what are we doing? We're essentially recovering from all the misallocated capital, all the misallocated spend, all the things that the Austrian economists talk about, like Hayek and Mises and all of those guys. When you misallocate capital and you have a fiat currency system, a lot of this has to be destroyed. And we've been kicking the can down the road for years. You can't kick it down the can down the road anymore. We're going to deal with the issues. We're going to pay the piper. We got to deal with all of this, and it's going to cause destruction in the economy. And not only that, every time we go through a deflationary wave, it's going to cause destruction in output, in manufacturing, and jobs. And then the subsequent inflationary wave that follows that is going to cause destruction in people's budgets and in people's lifestyle and the ability of the middle class to keep up. It's going to be a pretty nasty situation, just like it was the last 2 times it happened. And just be prepared for that. Just be prepared that inflation's not over. We'll deflate, and then we'll inflate again, and then we'll deflate and inflate again. And if the pattern holds, it goes 3 times, and then you have the biggie. And you have the big boom in the collapse of the economy. And that's likely when they'll do the reset and the move to central bank digital currencies. And I've been calling that to happen sometime in the middle of this decade, 2024 to 2026, somewhere in that 2 to 3 year time frame. And it looks like things may be aligning for that to be the time frame to occur. Because if we go back to the charts, if we go back to Tavi's chart, for example, this will take years for all this to play out. So we'll probably have deflation for another year or 2, something along those lines, and we'll have very high inflation getting higher than before, and then back down. And what's going to happen are these are going to be head fakes. People are going to look at this and say, oh, we've recovered, and everybody's going to say it's okay because we're deflating. We no longer have high inflation. And what's likely to happen is the Fed's going to make a wrong move here and they're going to bring down interest rates. And that's going to cause misallocation of capital, cheaper interest rates, people getting into loans, and then boom, another wave. And then destruction of the economy, people getting in cheaper loans to try to expand, and then boom, another wave. And that's likely what's going to happen. And it's probably not going to be, honestly, too pretty. All right. Looking back, I don't see any super chats, guys. For those interested, remember, you can do super chats if you have a question. The poll, inflation, deflation, or both, you guys have voted 76%, 3/4 of you voted that we're going to have both. And that's exactly correct. You guessed it. We're going to have inflation followed by deflation and inflation again. So all of you are right if you said inflation, deflation, or both, but you're more right if you said both. A little bit of a trick question, but you guys got it right. Thank you for the contribution from Dumb Money Media. The comment is, I hope you're doing good, brother. I'm finishing my master's and working on Silvervid. For those of you unaware, if you go to Dumb Money Media's channel, he does a lot of vids. I like the vids. They're very, what would you say, non-mainstream, which I like. I like non-mainstream stuff. He does a great job, great graphics editor, lots of promo for us and for other people in the silver and gold space. Thank you, Dumb Money Media, for doing that. Everybody go visit his channel and the vids that he does. Appreciate that. Don't see any questions, so I'm going to go back to the presentation. I'm actually going to talk about one of our preferred providers and one of my best investments. We brought this on the channel a week or 2 ago, and I'm going to do it again. And I'm going to talk about numismatics or collectible coins. The reason I talk about this is my best investment. So we're going to talk about a coin here that I have. It is a 1911D MS63 graded gold double eagle right here. And this is in an NGC graded package. You can see the back side of that coin, and then here's the front side of that coin. And it is an MS63 graded mint state 60 degree 1911D coin, a numismatic. And I've done better on the numismatic coins than I've done on bullion. And I'm going to show you a chart that basically proves out. Last time I was on here, I showed you, I think it was a 1904, just straight 1904, a double eagle. And I think the gain had been something like 67% over a 4-year period of time. I purchased this one, the 1911D MS63, a little bit higher rated coin than the 1904, which is an MS62. And the mint state just means how good it is, how good it looks. Like if you look at the coin, how many issues are there with, the quality of the coin, all that. They all get graded along the same scale. And between the time I bought it, end of 2018, beginning of 2019 to now, I've got basically 100% return on my money. I bought the coin at around 1,500. It's now trading at about 3,000. Now there's some transaction costs associated with, buying and selling the coin, but essentially I've made 100% return. Well, bullion hasn't gone up 100% in that time frame. So I can say that I earned more money from this numismatic than the bullion. And I have recently sold some of my numismatic coins to do some business expansion, some other expenses that I had. and I do have that money in my bank account. So this has been an executed trade on the old coin, 67%, and I'll execute this one pretty soon and take my 100%. And again, that's to generate cash flow. Now, some of that money I can put back into bullion. That's an investment strategy. Use the numismatics as a speculative investment. When it does well, then turn around and buy more bullion with it. It's a good way to increase your bullion stocks. I'm not the only one that does this, by the way. Silver Dragon, a very popular channel, about 132,000 subscribers on YouTube, does the same thing. He had a whole numismatic video where he did the same thing. He and a friend went on there. His friend he's in numismatics and writes for coin magazines. He's really well known in the space. They bought and sold a bunch of these, and he uses the profits to buy more bullion. That's a great investment strategy. And these coins tend to do pretty well. I've written guides on numismatic coins showing how they've done well over 100 years in terms of price. Now, if, on this chart dating back to 2000, the coin's average, is giving you a 400% return. Not so bad, about the same as bullion over that time frame. And over the recent history, it's done better. So when gold and silver is in a bull market, the numismatics tend to go up more than that. They tend to get demanded more, and their values go up as a percentage higher than just the bullion itself. And this is a pattern that's repeated throughout history. If you read my bullion guide, which is at 𝙎𝙊𝙇𝘿.com on the blog, you'll see that I've graphed that out for you. If you're interested, I do have a relationship with ITM Trading. They're the ones that I have bought and sold these coins through, and I basically swear by them. The only company I'll deal in numismatics with, period, and I've looked at several companies, and these are the guys that I like. Of course, Lynette Zhang has her channel where she talks about the bullion as well. You can sign up at the top right corner of this. You can see that there's a Calendly link. If you want to go to ITM Trading, you're interested, and you just want to talk to somebody and get some education, I encourage you to talk to them and get education. Don't buy anything on the first call. Get educated. Do your research. You can also call this 800 number, which is a dedicated advisor, 866-850-8258. If you want to do business with ITM, they're designated to Gold Silver Pro. So they've given us designated person to work with you. And that was a requirement I made with them. I didn't want just anybody. I wanted the guys that I trusted most, that are going to give you the best strategies. Of course, they're a great company and they'll give you the best strategies anyway, but you get personalized service by going that way. And again, it does help the channel. And yes, this is a preferred provider sponsor, if you will, but I swear by it. I have done very well in the numismatics. This is a market that's very robust. I've been to coin shows here in the Dallas-Fort Worth area. I've been to coin shows at conferences. These coins can do very well. All right, so that's a preferred sponsor for today. We're going to go ahead and end the poll. Inflation, deflation, or both? About 3/4 of you say both. I think you're correct. It goes in waves. We're at the end of inflation wave 1, it looks like, rolling over into a deflationary period. We'll have to see what happens. Does the Fed overreact in deflation, lower interest rates, and ease and pivot essentially, and exacerbate moving into stage 2 inflation? We think that's probably going to happen. And it's going to rip apart the economy, because the economy doesn't know what to do. It's getting mixed signals. It doesn't know, well, inflation, maybe we should pull back, be more fiscally responsible. Deflation, maybe we should expand and more money goes to CapEx. And these waves are what has to happen when you're dealing with misallocated capital. Once it gets through the third wave, people have basically figured out the misallocated capital and the problems with the economy. And at that point, everybody, pulls out, goes to safe assets, and it crashes. But the reason you see that three-step, that three-stage is very common in finance, because it's psychological. There's a big science towards the number 3 in history. Shakespeare was an early writer who figured this out in the Law of 3, and he incorporated the Law of 3 into a lot of his writings. And the Law of 3 basically states something has to happen basically 3 times, or things come in threes, before people figure out the pattern and react to it, and really react the right way. This happens in financial markets all the time, where something will happen, people will react. Oh, it wasn't the right reaction. Then it happens again in a bigger wave, and then people go, oh, maybe we should do something. And then they overreact. And then the third time, people are like, okay, we give up. We're not fighting it. We're going to let the crash happen. You let the crash happen. The misallocated capital gets cleaned out of the system. Assets are revalued. Gold will be revalued. By the way, in gold revaluations, numismatics do better than straight bullion. No joke. If you look at the chart of numismatics will get valued higher. Why? They're collectibles. The rich invest in them. A lot of money during these times goes into numismatics and boosts up the prices of those coins, much like it does the bullion. And remember, the rich invest in these. A lot of money can go in these coins. And that's why the top value of a collectible will go up higher than bullion, because it's going to get that money. And it doesn't always stay up. Sometimes it comes back down, but overall, those coins tend to do better during tough periods. So if you're interested, again, we gave you that information. Thank you so much for the contribution by Dumb Money Media. Oh, as an update to Tuesday, I came on Tuesday and talked a little bit about the situation with my daughter. I actually didn't intend that to be quite as emotional it was. I just wanted to give an update because I didn't know when I was coming back, because we had some issues with getting her stabilized and finding supplies and things. There's a big insulin shortage going on, which we didn't know about, but we've got that stabilized. She's doing well. Thank you, everybody that's inquired and supported us. I appreciate that so much. And we should be back. We've got a lot of content coming next week, a lot of pent up content. We've got about 4 or 5 interviews for this channel and also for Stock Pulse, because I'm taking over content for stockpulse.com. Those of you that joined us at Silver Symposium in Coeur d'Alene last year and in Washington this year have seen me speak at Silver Symposium. I'll be doing a lot of their content going forward. I've done 4 or 5 interviews for a show we're calling Inside the Markets, and then we're also going to bring some additional shows to stockpulse.com as well. And we'll also be doing some collaborative work with Stock Pulse's Silver Symposium. So stay tuned for that. It's going to be a big announcement in 2023. I think it's going to bring us a lot of additional views and a lot of additional exposure to the channel, as well as interfacing with you guys at the conference and doing some collaboration that way, so you guys get the best of both worlds. So stay tuned for that. I think this is gonna about do it. I planned on this live being a little bit short because I've got so much other stuff going on. Again, want to give a big shout out to everybody here for supporting me as we went through kind of a tough week. Everything is good. Daughter's doing well. Appreciate that support. We're doing good. We're still here. We're going to be providing content, but I think a lot of surprises for 2023. We're going to be expanding content, bringing you more content, doing a lot more collaborations and partnerships with other people in the space. I think you're really going to enjoy it. Some bigger name guests are going to come on the channel. Also, if you go over to Stock Pulse, I did an interview with Rob McEwen, the founder of 𝙂𝙊𝙾𝙆𝙎 Corp and now McEwen Mining. It was a great interview. We talked about the origin of 𝙂𝙊𝙾 Corp and how he built it. And there's a special little excerpt in there for him basically getting threatened and people showing up with guns as he's building 𝙂𝙊𝙾 Corp. I won't give you the details of that, but if you want to know, go to stockpulse.com, click on the Hidden Secrets of Money series and watch an interview of myself with Rob McEwen to see how he basically was held up at gunpoint and had threats to his life as he was building 𝙂𝙊𝙾 Corp. So as these guys are building these major gold mines, don't think that it's easy. A lot of times you're running up against influences that don't want you to do it. And sometimes at least a very interesting stories, but also a lot of information from Rob on that interview about how he built 𝙂𝙊𝙾 Corp and how he's now building McEwen. I think you might find it very interesting if you're interested in the equity space. That interview is up on stockpulse.com. Stay tuned. We're going to have a lot more interviews coming. The last couple of days, I've interviewed Chen Lin of Chen Stock Picks, Tavi Costa of Crescat Capital. Tomorrow, I'm interviewing Lauren McGaugh with Raina Gold, and whose father is Dr. Peter McGaugh. And we've got more coming to the channel as well. I also have a very special interview next week with Thomas Coughlin, the CEO of Kinesis, where I walk through how Kinesis actually works. We walk through my account. I show you my account. I show you the transactions I've done, and we walk through all the cool platform features. A lot of you have asked me questions about Kinesis since we last talked about them on the program. So I got the CEO on, and we walked through every one of the questions I got from you guys. So if you're interested in all at Kinesis, at their financial solvency, at how the product works, and how you can get involved in that product, I've got the CEO on the program next week for you as well, answering all your questions. Thank you so much for everybody who's joined into the program tonight. Thank you, John, for being a supporter of the program. Thank you, Peter, for riding shotgun. EC660 for being a supporter as well. Thank you, everybody, for being on the channel, supporting us. We're going to have additional content coming out. Sunday, we'll get back to our normal weekly market wrap-ups where you can prepare for the week. We'll give you the full story on what's going on in the economy, read out all the economic data, show you the details on what's going on in the gold and silver trade, and get you prepared for your trading week. That's going to do it for me for this week. Thank you, everybody, for joining the channel and supporting Gold Silver Pros. Thank you, everybody, for supporting me this week as we got through what we needed to get through on a personal basis. But remember, stay tuned. We got more coming. We're expanding content. It's going to be a lot of fun. Thank you so much for supporting the channel. Till next time, this is Rob Kientz, Gold Silver Pros.